Hey there, Lysandra Everett here, and with today's video, I'm going to show you how to read your tax return. I was talking to a group of business owners and we were just discussing business taxes, and I got the idea to ask the question, how many people knew how to read their tax return? And over 70% of the people in the room did not know how to read their tax return to understand what's there. So that is what I'm going to do with today's video. I'm going to go through the federal portion of the return. State returns vary. So this will help you with your federal return. State returns take their information from federal. So if you know how to read your federal return, then the state return is kind of halfway done. All right. Usually when you get your taxes done, you get this. It's called a result letter. And this is where most people stop. So in this case, Jane's step here is due a federal refund of $731. Like I said, most people just stop here. Hey, I'm getting a refund. Let me sign and go on about my business. But that is not what you need to do here. You really need to look at the return and see what's in there. So that's what we're going to do today. Okay, so the Form 1040 is a summary of your tax return. Every number that is on the 1040 has to come from somewhere. It has to come from either a document provided by a third party, like your W-2, 1099s, that kind of thing, or your, information that you provide. In the case, if you have a business, then you have your profit and loss statement that you provide to your tax professional, okay? So every number has to come from somewhere. All right, so let's get into this return. So first thing is the filing status. Jane here is filing head of household because Jane is single and she has a qualifying dependent here. All right, if you are married, you have two options: married filing jointly or married filing separately. There is no one person files head of household and the other person files single. That's not how it works. These are your two options. There are some exceptions to where, in the case of a separation or divorce, that a married person can file head of household. Seek counsel, not counsel, but seek advice of your tax professional to determine if you qualify for that, okay? Single is just that, single. You're not married, it's just you. And then qualifying widower is for someone whose spouse has passed away. The year that the spouse passes away, they may file jointly or separately, whatever their choice is there. The following year, they'll file as a qualifying widower. Okay. So you verify that your name, social security number, address, everything is correct. Now, please note that the cryptocurrency or virtual currency question is here. I'm not sure where it's going to be for the 2021 tax return, but on the 2020, there's this question here on the virtual currency. Make sure you answer that appropriately. Okay, and then we get down to the dependents, to make sure the dependent information is correct. Now let's get to the numbers. All right, so Jane here had $64,963 in W-2 income. If you have, in the case of a married couple filing jointly, this number would equal all the W-2 box 1 numbers. So if you have, whether you have multiple jobs or you have two spouses working, if you add up all the numbers in box 1, it should equal this number right here on line 1, okay? Then line 2 is interest. That's what's going to come from the 1099 INT. And that's going to be provided by like a bank. If you may have interest on a savings account, it could even come from the IRS. If you had a refund that was delayed and the IRS paid interest, which is taxable, then that's here on line 2. There are some cases of tax exempt interest, but 9 times out of 10, you're going to have taxable interest. Line 3 is dividends. This is what you get from your investments. There are qualified dividends and ordinary dividends, and your statement will specify how much you have of each. And so the ordinary dividends are taxable. If you have an IRA distribution, that will be here on line 4. If you have a pension, that's going to be here on line 5. If you have Social Security benefits, that's going to be here on line 6. If there are whatever portion of those items are taxable, they'll be over here on line 4B, 5B, or 6B. But back to Jane here. So she's got some capital gains of $9,612. She's got other income of $35.76 from her Schedule 1. So her total income for 2020 is $78,408. She has an adjustment to income here. An adjustment is another name for a subtraction. Okay, so she's got $277 in adjustments. So then her total adjusted gross income is $78,131. And the adjusted gross income is used as a marker for different types of benefits, right? We had the stimulus checks where if your adjusted gross income was A or B, then you would get X, right? So when people are looking for your adjusted gross income, that's your line 11. Okay. Then the next line is standard or itemized deductions. Jane is itemizing here. Okay, if you're not itemizing, then you would have the standard deduction that's here. Jane also got the qualified business income deduction of $581. That qualified business income deduction comes from the Tax Cuts and Jobs Act. That's up to 20% that you deduct from your profit that you don't have to pay taxes on. So her total deductions here is $21,276. And so if you subtract this $21,276 from $78,131, that brings her taxable income to $56,855. Now we get to the tax part. Okay, so the tax due on that amount is $5,867. And then she's got the child tax credit of $2,000. Now, a tax credit is a dollar for dollar reduction of your tax liability, where a deduction reduces your taxable income. So because Jane has a $2,000 credit, then her tax now is $3,867. She doesn't have any other self-employment tax here. So her total tax due is $3,867. She had $45.98 withheld from her W-2. And so that's her total payments in. So if you take that $45.98, subtract her tax of $3,867, that's what leaves her with a refund of $731. Okay, so that is the summary of the 1040. Let's get into the return. So now, the first thing we see here is the Schedule D, 9612. Okay, so let's go over here and look at the Schedule D. Okay, if you read the top of the different forms, it will tell you what the form is for. So when people say, oh, I didn't know they put this in my return, you either didn't get the return or you did not read the return. But every form is going to tell you what it is. So Schedule D is capital gains and losses. And it's divided into two parts, the short-term capital gains and the long-term capital gains and losses as well. And explains to you here, short-term capital gains and losses, generally assets held 1 year or less. And then the long-term capital gains, generally assets held more than 1 year. All right, so Jane has some long-term capital gains. She received proceeds of $19,875, and she had a cost basis, which is what she paid for it, of $10,263, and that's what brings her capital gains to $9,612. That $9,612 is right here on line 7. So the number didn't come from just out of thin air. There is another schedule that goes with it. Okay, and then the next line is Schedule 1 with other income. So let's go to the Schedule 1. So the Schedule 1, it says at the top, additional income and adjustments to income. And it's also divided into two parts. Part 1 is additional income. Part 2 is adjustments to income. So in Part 1, she had a taxable refund of $672. She's showing a loss of business income or loss. So she's showing a loss of $3,475. And then she's showing rental income for $6,379. So if you add all of these numbers together, you get $3,576, which is right here on line 8. Back to the Schedule 1, she has an adjustment for student loan interest of $277. That $277 adjustment is right here. Okay, now going back to the Schedule 1. For your taxable refunds, this is going to be a 1099 from Schedule C. Okay, and that information, which we'll go over, is going to be provided by the taxpayer. You're going to be providing the profit and loss statement, your income and expenses. And then we have to look at the Schedule E. So let's go look at the Schedule C first. So the Schedule C, it says at the top, profit or loss from business. So if you see a number in the line with the Schedule C, and you see at the top a Schedule C, profit or loss from a business, and you know you didn't have a business, then that is a red flag, and that should raise concern for you. Okay, so in this example, Jane had she had a sewing business. She earned $15,000, and we just threw some numbers in here: $6,500 for supplies and $11,975 for other expenses, for total expenses of $18,475. And so if you take that $18,475, subtract it from $15,000, that gives you the loss of $3,475, which you see right here in your Schedule 1, Part 1, and then that's added in together with all these numbers to get to $3,576, which is on the 1040. All right, then there's the Schedule E. Let's go look at the Schedule E. So Jane has a rental property. It was available to rent 365 days. It was rented the whole year. So she received $24,978 in rental income. She had some expenses here for travel, cleaning, the mortgage interest. She had some depreciation here. So the total expenses she had was $18,599. If you subtract this $18,599 from this $24,978, that leaves her with a profit of $63.79, which is right here on the Schedule 1, Part 1. Again, all these numbers added together get to $35.76, and that $35.76 is right here. Okay, now let's get to the Schedule A. We have not looked at that yet with the itemized deductions. So she had state and local income tax of $56.95. If you have a state that has income tax, that number should be in here somewhere. And then she also had, she paid by cash or check, maybe, to a charitable organization, $15,000. Okay, so if you add this $15,000 to this $56.95, you get a total of $20,695, and that number is right here on line 12 for your itemized deductions. Then there's the Schedule B. The Schedule B, interest and ordinary dividends, says right there at the top. So we had the $32 in interest, and then we got some dividends from TD Ameritrade. Here's the $32 interest on line 2B, and then the ordinary dividends on line 3B. So we've gone through here, and we have shown you where all of these numbers come from. Okay, you should not have any questions about any numbers when you leave your tax professional. Okay, that's just the way it is. And with this summary, it tells you where to look for these numbers. So again, this is your W-2. This tells you to look for a Schedule B, but it comes from the 1099s provided by the third parties. Your capital gains and losses is the Schedule D. That's going to be a statement that's issued either by an investment company if you have, if you're trading, stocks, or if you are, if you're investing in cryptocurrency. All of those will be here on line 7, the aggregate of those numbers. Your other income, you're looking at the Schedule 1. And so by knowing this, when you walk away from your tax professional, if you have any numbers in any of these lines, there needs to be a corresponding document, or you need to be asking the question, where did this number come from? And if it doesn't make sense to you, you don't sign the return. Here's why. We're going to scroll down to the bottom here. And it says here, under penalties of perjury, I declare that I have examined. Examined is not just skimmed over it. Examined means you really took some time to look at this thing. That I have examined this return and accompanying schedules and statements, and to the best of my knowledge and belief, they are true, correct, and complete. This is you as the taxpayer when you sign your return. The next sentence, declaration of preparer, other than the taxpayer, declaration of preparer is based on all information of which preparer has any knowledge. So that means that the tax preparer prepared your return based on the information that you provided. Like if there's something that's missing, they don't know about it. That's what that means. So that is how you read your tax return. I really hope this helps you out in going forward and being able to understand exactly what is in your tax return. The tax documents may change. They may change their format, but 9 times out of 10, a lot of this stuff is going to remain the same. It's still going to have some type of corresponding documentation or corresponding numbers that make sense to you. Okay. So I hope this helps you all out. Thank you so much for watching, and I will see you all next time. Bye.